Welcome in, folks. I'm about to get into and show you the 6 stocks that I will likely be buying in November 2023, why I'm buying these stocks, going over my bullish thesis. This is always my favorite video I record on this channel each and every month. Now, before we get into these stocks, I thought it was important I show you this. This is a 2-year chart for the stock market indexes, all 4 of the major stock market indexes. This is a 2-year chart. This is a Dow Jones Industrial Average, the S&P 500, the NASDAQ, and the Russell. Now, we're going through an extraordinary time because on a 2-year, the Dow is down over 8%, S&P 500 is down about 10%, the NASDAQ's down over 17% in the past 2 years, and the Russell 2000 is actually down about 28% in the past 2 years. And so I just want everybody, before we even get into today's video, just to understand that if you are somebody that is buying stocks over this next 6 to 12 month period, just understand you're doing it at a pretty opportune time. Because it's very rare, if we look at the last, let's just say 40 years in the stock market, it's very rare you could ever buy stocks that are, let's call it the indexes are lower than they were 2 years prior. Never mind substantial numbers lower than they were in prior years, which these are substantial numbers. We talk about a Russell 2000 small cap stocks down 28% in the past 2 years. That's a pretty extraordinary move. So just understand you're likely buying in this next 6 to 12 months at a pretty good time to be a buyer in the market overall. Not the best time to be a seller, but in terms of being a buyer, absolutely. I appreciate everybody joining me here today. 2 things to run through before we get into this. One is I am on Twitch now. That will be the main pinned comment down there. I basically do a show Monday through Thursday and run through the last hour of market trading, as well as basically after hours. So I go through the earnings reports, and like this week, for instance, if you're watching this way in the future, these will already be over. But this week, AMD's reporting, PayPal's reporting, Elf's reporting, Airbnb, Etsy, Apple. I'll be reacting to all those earnings reports live on there. So it's absolutely free to follow me on there. So you definitely would make sense if you're really into the stock market. And the other thing is, if you're looking to get access to all my courses, join my private group, get part of the 6-figure, 7-figure club, all those sorts of things, then check out the pinned comment down there. You can fill out an application and we can get you in there this upcoming week. All right, guys, let's get into this. First stock up here, I thought we'd get the easiest one out of the way, because I know everybody watching this video knows before you even watched it that this stock was going to be in it. And I said, let's just get this baby out of the way first and foremost, and then we can get into the other 5 stocks. And that first stock is PayPal. PayPal, if you're a true watcher of this channel, you knew this one was going to be one of the 6 stocks. There was no debating, no contemplating. Some of these other stocks might surprise some folks. This one's not, okay? PayPal. Steal deal. This is the #1 stock I have been buying the last several months and plan to continue to for the next few months, okay? Here's what we're looking at with PayPal. Forward P on the stock of 10, which is just a complete joke now at this point in time. $55 billion market cap. It's down about 42% in the past year. Now, where I want to start is you got to understand PayPal owns many different businesses, okay? There are 2 main businesses that people know are what's called PayPal and Venmo. Now, this is in the United States of America, most downloaded finance apps on a daily basis, okay? PayPal's number 2, Venmo's number 3. That's what I call MMS, major market share. No one has the sort of market share that PayPal has. When you have 2 of the top 5, or we say 2 of the top 3, most downloaded finance apps on a daily basis, it's incredible, right? But they're not just big in the United States. PayPal's big really in many parts of the world. United Kingdom, PayPal is the 3rd most downloaded free finance app. If we look at, this is Canada. PayPal's numero uno, top finance app in Canada. If we look at Germany, #1 most downloaded finance app, PayPal. If we look at France, number 3 most downloaded finance app on iOS, iPhone, PayPal. If we look at Italy, number 2. If we look at Australia, number 3 most downloaded finance app, right? This is incredible. Now, there's also an interesting phenomenon that's going on recently, which is actually, I've watched in the United States, PayPal actually become more downloaded than Venmo, because I've seen many times in the past where Venmo basically would overtake PayPal. But recently, PayPal's now moved up to the number 2 most downloaded app, and it's actually surpassed Venmo here recently, and it makes you think, like, how is that? Like, why is that? Considering Venmo seems so in with especially a lot of the youth, teenagers, people in college. Like, go to a college campus and try to get somebody to transfer you money. Every single college campus you go to, they're all going to say Venmo, Venmo, Venmo. That's the thing, okay? Venmo is the thing. And yet PayPal's actually surpassed it recently. So there's an interesting phenomenon that's going on. I don't know if you guys are aware of this, but I think everybody should be aware of this. The number one top app, downloaded pretty much on a day in and day out basis, is an app a lot of people might not have heard of, or maybe you have heard of this. It's called Temu. Temu, shop like a billionaire, okay? And this has gone insane the past year since it launched in the United States of America, okay? Now, a lot of people using this service do not want to give their credit card or debit card information. And I don't know why this is. There's some people that think that Temu steals their information or whatever, okay? I have no opinion of that. But what I can tell you, this is an insane benefit to PayPal. And do you know why? Well, PayPal's one of the top things that is offered to pay. So a lot of people either don't want to pay with credit card or debit card because they feel like their numbers can be stolen or whatever, right? And so they use PayPal. And then just a lot of other people in general just love to use PayPal as a checkout method anyways. I do that all the time. Like if I have a PayPal option, I just click on it because it just scans my face and boom, it's right through. There's no like I have to go get my wallet and go see what credit card I want to put on it. It's already hooked up. It's simple, right? And so this is an interesting phenomenon. Now, analysts have started to pick up on this over this past month. I have seen some analysts really talk about this in the past month or so, okay? PayPal's branded checkout button is poised for growth amid China's Temu surge. And so this Temu thing has just gotten PayPal a lot more relevance, just to be quite frank, and it's almost happened overnight. Now, if we look at PayPal's income statement, it's been phenomenal over the last several years. From 2018, they did over $15 billion of revenue. On the trailing 12 month, they're up to over $28.5 billion of revenue. Operating income went from 2.2 billion to now $4.7 billion in operating income just in the past few years. That's an extraordinary move there, and it's not done anytime soon. Also, PayPal's a phenomenal company because they're known for beating earnings estimates quarter in, quarter out. If we look, this is past many quarters. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is past 13 quarters for the company. In the past 13 quarters, they missed on EPS one time. One time in the past 13 quarters, and it was only by 1 cent, by the way, the miss. So it was like super small. So basically, this is a company known for beating analyst expectations. Now, why that matters so much is one, it helps win over Wall Street long term, but two, this means likely, especially if the company continues to beat, which I think they are, all these analyst estimates you're looking at are too low for this company. Because keep in mind, what does PayPal come in and do? They beat analyst estimates, quarter in and quarter out pretty much, right? And so naturally, analyst estimates are going to end up being too low for this company over the next several years. So although it looks like you're paying a 10 PE, which is insanely cheap for a company like this, especially growing the way it is, it's very possible it's a 9 PE in terms of this year's numbers. It's very possible next year is actually trading at a 7 forward PE and not an 8.9 PE or whatever, right? So that's a very important thing that I think everybody should understand out there, is you could be actually paying a much cheaper price today than you think you're paying based upon the fact that this company pretty much beats almost every single quarter, right? Now, on the balance sheet, the company is sitting on around, let's call it a little close to $10 billion of cash and short-term investments. And there's something going on, if you want to say, like, this stock price being low right now, okay? It's such a huge benefit for two specific people. One is people that are buying the stock right now, people like myself, okay? And maybe some people watching this video or whatever, right? We believe this is an extremely discounted, undervalued stock that's going to boom over this next couple of years. The other group, and this helps PayPal immensely, is right now, as I speak, PayPal has a massive share buyback on, okay? The cheaper your stock is, the more shares you can buy back, right? And so it's an absolutely beautiful phenomenon PayPal has going on. It's the best thing you could possibly ask for. Because here's the deal, okay? If we go back, they were buying about $667 million of the stock back. Then they bought $939 million, then $953 million, then $1.4 billion, then $1.44 billion, right? Maybe this past quarter they bought $1.5 billion or back. We don't know, okay? But the bottom line is, it's the best situation when you can buy back your shares for insanely cheap prices because you can buy more shares. No different than if PayPal stock's $100 today versus $50, I can buy a lot less shares at $100, right? Absolutely beautiful. Now, we got a new CEO who's incoming here, Alex Chris, who I believe should do a phenomenal job. We'll see how he does over time. He has a lot of great experience from Intuit. Intuit was a very loved stock in the market over the years and one of the best business models out there. And I've already seen Alex Chris very early on. He's already making moves. He's selling off their Happy Returns business to UPS. which I think is an interesting direction. So it's very clear to me where Alex Chriss is kind of sending this company. He wants to send this company into very focused on PayPal, Venmo, Braintree. We'll hear what he has to say on the conference call this week, but my belief, and I'll react live to that on Twitch this week, the conference call, but my belief is he wants to focus his business PayPal, Venmo, Braintree. Everything else can be everything else. There was a vision in the past, especially in like 2021, of like trying to become an overall e-commerce company. I don't think that's where he wants to take it. And seeing a move like this kind of shows me that's where he wants to take it. Now, Braintree is not talked about enough in regards to this business. Everybody thinks about PayPal, Venmo. Braintree's a magical service on the back end that helps companies basically run transactions and do it in a very seamless fashion. And they've got a ton of customers that are very important customers, right? And the thing that makes Braintree so magical, in my opinion, is nowadays people like to pay a lot of different ways. It used to be, everybody just pay it with a credit card if you bought something online, and that was that. But nowadays, people want options to pay with credit cards, debit cards. They want PayPal as an option. They want Venmo as an option. They want Apple Pay as an option. They want Google Pay as an option, right? They want Visa checkout. They want to, different people like to pay different ways. And so somebody like myself, I use PayPal all the time. I use Venmo maybe once a month, not as often. I use PayPal usually every single week, right? Other people might like Apple Pay. Other people might like Google Pay. The bottom line is you got to have all these services, and the less options you have, the less revenue you're going to make over time. The more options you have, the more revenue you're going to make. If somebody's payment method is not there, that's not good as a business, right? And there's been a lot of studies done over time that if you have PayPal as an option, your sales increase quite a bit, right? Now, the stocks move down so considerably that I have to ask myself, am I making a bad decision here, right? Because there's one of two scenarios and there's no in between. Either I'm wrong on the stock or the market's wrong on the stock. Either I'm wrong or the market's wrong. Now, I did a lot of thinking about this. And I thought about everything across the board. I thought about the competition, which the competition is nothing new. The competition has been there for a decade. All these other services and possibilities have all been there for a long time. I see day in and day out, PayPal and Venmo, the most relevant payment services pretty much out there, around most of the developed world, especially most of the Western world, right? I see this company executing on their numbers. I see the valuation where it's at. I think about recession. I think about risk reward. I think about the balance sheet. I don't think I'm wrong. I think I'm right. And I think the market's gotten this one very wrong. And I mean incredibly wrong. And I think by this time next year, they're going to be trampling over themselves to buy this stock. And I take it back to Meta. Everybody was so Well, howdy there, folks. Welcome into today's video. We have a lot to get into in this one here today. My goodness, it is a very busy video. Obviously, we're going to speak about Apple's earnings, Palantir's earnings, what's going on with PayPal stock, many others. I put $20,000 into a stock today that's going to surprise a lot of people. When's the last time I recorded you guys an outdoor video for the main channel? It was so long ago, I don't even remember. Like an outdoor video for the main channel, this never happens. So it's rare. It's about 70 degrees outside, and I said, I'm recording outside tonight, okay? I deserve it after today's good day. It was a great day in the public count here today, up over $49,000. So definitely spectacular, and it was extra spectacular because our biggest position in the public count was down today. Meta decided to sit out the rally, but hey, I'll give Meta a day off because that stock has been a beast this entire year, so I'll give it a day off, but it was weird. Tesla, we are up over $20,000 here today in the public count. Amazon, $1,100. Palantir, obviously massive move, 20%. We'll talk about Palantir and some shocking things that happened there. That one was about $17,000 up today. Elf on a Shelf, about $3,500 up. Should have been up way more than that. PayPal was up about $5,800 here today. Skyworks up about $1,600, but we'll probably lose that $1,600 tomorrow on Skyworks. Fubo was up $5,200 here today. So the biggest positions really in the public count were really rolling here today, okay? Alrighty, so I'm going to start out off the top, talk about Palantir, okay? Obviously, it's a significant position in the public count, 5,555 shares, been doing very well with it, and we'll speak about if I'm planning to add more Palantir shares in just a moment here, okay? So, first off, the income statement was absolutely, positively an unbelievable A+. I couldn't believe it. I was like, what? I mean, it was as perfect gets. Revenue grew to $558 million versus $477 in the same quarter last year. Cost of revenue hardly went up for the company. Hardly. I mean, it went up, what, a few $100,000? Like, it was nothing. Gross profit, $450 million versus $370 the same quarter last year. So basically, gross profit was up around $80 million or so. That's incredible on a year-over-year basis. Sales and marketing was actually down for the company year over year, 176 versus 182 in the same quarter last year. Research and development was up about roughly $5 million or so. You got, as a tech company, always got to spend on R&D. You always got to stay ahead of the curve, right? Especially if you're Palantir. General and administrative was actually down about $20 million roughly. I was like, okay, let's go, baby. So total operating expenses actually dropped for the company about $22 million year over year. Now, if your operating expenses are going to drop like that and your gross profit went up $80 million, then you got some fun numbers coming for you, okay? So overall, the income before taxes was $79 million for the company, right? I mean, yeah, income from operations, 39 mil, interest income, 36 mil. Yeah, 79 mil there. Net income was $73 million. Now that compares to the same quarter last year was $123 million loss, which shows how fast Palantir's really turned the ship around in regards to this, right? I mean, you're talking about roughly a $200 million differential between what this quarter was versus what they were at this quarter last year. That's incredible. Karp and the team deserve claps. 2023 to me has really represented the year of getting the ship back pointing in the right direction. And I think 2024 and beyond for Palantir is really around growth, okay? Now, to take this a step further, Palantir is now entering the game of beats and raises, okay? So basically what they did is they beat on their numbers. They beat on their bottom line, non-GAAP EPS 7 cents. That beat by a penny, which is actually a pretty substantial beat on a percentage basis, by the way. Revenue beat as well. They beat by about $2 million in terms of revenues. They also raised guidance in kind of what they're expecting versus what analysts are expecting, right? So the game of beats and raises has now started for Palantir. Now, I told you guys in the video I produced for you, a night ago or 2 nights ago, that I was 0% scared going into PayPal and Palantir's earnings. And one of the big theses on why I was not scared at all is because I understand the numbers very well for these types of companies, right? And so for Palantir, I told you, like, analysts are too low on all their estimates. Palantir is going to come in with beats and beats and beats. And that's what we're just starting to see play out now at this point in time. And analysts are still too low. Let me be quite clear about that. They're still too low in what they're expecting for this year and next year when it comes to EPS. The forward Ps look like they're really high, but the truth is, those forward Ps you're seeing are likely not accurate. They're likely far lower in reality, likely far, far lower, because the company's starting to come in and beat EPS, and I think they're going to, if anything, it's going to accelerate in terms of their earnings per share. And we'll get into why that's going to happen in here in just a moment. Analysts are also too low on their revenue estimates as well for this company, in my personal opinion. And so what we're going to see play out now is Palantir come in, continue to beat revenues and earnings per share. And then everybody realizes, oh, Palantir is actually a cheaper stock than maybe we thought it was, 6 months ago, 12 months ago, something like that. Now, this was absolutely huge on the conference call. Karp, he basically says, I'm sure Ryan will talk about this, the scale function of this. It's like one of the logical question is if you are doing really well, why are you so happy that you have $40 million in operating income? Well, it's because the unit economics are so good moving from boot camp, from pilots. It took about 6 months to boot camps, taking about 2 days, right? So their old way of doing business was they had to basically consult with a customer and get a customer onboarded, but it was like a 6-month process. Now they can basically accomplish what they used to be able to accomplish and get the customer excited, but in a matter of 2 days, right? Alex Karp talks about one of the boot camps he took, it was 6 hours. So the company's going to be so much more efficient moving forward, right? Which means the sales cycle for Palantir, which has been one of the only bad things you could ever say about Palantir is, wow, it's a long sales cycle, has almost overnight been completely transformed for this company, right? Which means we have a fundamental change going on in Palantir's business model. You always in the stock market, a very important tip I'm going to give you, okay? If you want to find special stocks and special opportunities, you need to find companies that have a fundamental change in their business model for the better, right? Because there can be 2 types of fundamental changes. One is for the worse in the business model. One is for the better. Palantir has a fundamental change in the business model for the better. The fact that they're going to go from a sales cycle that used to take 6 to 12 months, if not longer than that, to maybe a sales cycle that takes days or weeks is a fundamental change. Never mind that, if you spend 6 or 12 months with a customer before, right, and they still weren't convinced, then you lose that opportunity. But now if you can convince a customer like that, you can win that contract much faster, which is why I think we're going to see a nice, really, regardless of what happens in the economy, really, I think we're going to see a very nice reacceleration of growth for Palantir in 2024. And I'm talking about quite considerable. This is no small change, folks. This is a fundamental, huge change. And it's important that everybody as a Palantir shareholder understands how big of a change this is that's actually going on in this business model right now. I don't think there could be anything bigger for Palantir than this change we're looking at right here when it comes to these boot camps. I mean, absolutely tremendous, right? Now, let's speak about the stock. And if I want to add more of the stock now that I know this, okay? So first thing is, Palantir is already an important position for me. It is in my portfolios, right? In the Patreon portfolio, for instance, it's the second biggest position I have in that portfolio, the second biggest, okay? And so that's already a big weighted stock if it's the second biggest position for me overall, which I feel comfortable with given the income statement and balance sheet. By the way, if you want to see the moves I'm making in that portfolio each and every week, the stocks I'm buying and selling, check out the pinned comment down there. I'll have that as one of the 2 pinned comments down there. And you can join there and basically see the moves, plus be part of that Discord chat over there and see the moves I'm making week in and week out with that portfolio overall, right? I also have, and I'm not a big player in the options market, I can tell you that. It's very few and far between. But I do also own some Palantir call options. These are $17 strikes. They expire January of 2025. So far, we're up 71% on these. And if Palantir stock obviously does a lot better over this next year or so, it will print a whole lot more money than what it's printing now, right? And obviously, I have the 5,555 shares of Palantir overall. So I feel pretty comfortable. I wouldn't mind owning a little more Palantir, but I feel pretty comfortable, given the call option position, given what I have in the public count, given that's the second biggest position in the Patreon portfolio. I feel pretty comfortable with what I have in Palantir. I wouldn't mind owning more, though. I wouldn't. I mean, given what I think is going to happen with this company's numbers over this next few years, given that balance sheet, and given what management has really proved out, right? And so my overall happiness with Palantir over the past 3 quarters specifically is I'm pretty darn happy, to be honest. And just as these quarters ticked along, I'm just happier and happier, I guess I can say, with kind of what Palantir's doing, what they're putting up for numbers. And I think they're going to win back a lot of shareholders that maybe they lost in the past. And I think they're going to start winning over a lot of Wall Street over this next 12 months. If they keep executing and they step it up into the next level, which I think they're going to do, I think they're going to win over a lot of Wall Street. And I think this will become a very large market cap very quickly. So very happy with that. Obviously, S&P 500 inclusion likely coming at some point, probably in 2024. It's just going to be a hard prediction to make if it's coming, first quarter, second quarter, third quarter, fourth quarter. That's a losing proposition to try to anticipate what quarter it's going to come, but it's likely coming. It's still no guarantee, but it's likely coming, okay? 5 stocks to buy for 2024. That's what we're going to get into in today's video, folks. I thought about the 5 strongest stocks I could possibly imagine going into 2024, the ones that have the most attractive valuations as well, with lots of potential upside here. And I thought, let's go ahead and talk about these 5 stocks. Let's go in depth on all 5 of these stocks. And let me share my perspective. Now, there's one of 4 scenarios that could play out for the economy, kind of the overall market in 2024. And in today's video, I thought about what companies would do great even in that sort of scenario, all these different scenarios, right? Which scenarios, one is where earnings went down, recession hits, job losses, revenues went down, right? The Fed starts cutting rates in the second half of 2024. That's a scenario that could play out. Scenario 2 is economy weakens, but we don't have a recession, jobs hold up, inflation's in the 3s and 4s all year, and the Fed basically keeps rates about where they're at right now. Another scenario that could play out for us in 2024 is the economy gets stronger, unemployment stays in the 3s, real real wages boom, housing bottoms in the wintertime, home prices start to climb in the second half of 2024, the economy is seen as too hot, and the Fed has to keep raising rates actually, and starts raising rates again in 2024. And then the last scenario that could potentially play out here is the economy holds good, unemployment stays, let's call it in the 3% type range, real wages recover, housing and autos bottom maybe in the first quarter, CPI in the 2s and 3s all year. The Fed, let's just call it, keeps rates about where they're at. Maybe they lower rates just a little bit, and the market just booms into 2024 and into election 2024. So those are the four scenarios that could play out for us in 2024. And so these stocks I'm sharing with you here today, I believe they're going to do well regardless of any of those scenarios, folks. So first stock up here of the 5 stocks is Elf Beauty. Elf Beauty, tremendous company, one of the strongest companies literally in the stock market. They've been through everything. They went through tariffs. They went through trade war. They went through Rona. They went through the NASDAQ drop of 35% plus last year. They went through super high inflationary environment. They've gone through it all. And regardless of the scenario they are thrown into, they grow stronger and stronger and stronger. And there's very few companies that can truly say that. Now, I will say of the stocks I owned over the past 5 years, Elf is the best company. Elf is the best company. They are the most well-run company I've really seen. And I own a lot of great companies. I own Meta, I own Tesla, I own a lot of great companies. But no one takes the cake over Elf, which also explains the share price gain. I've made 1,200% plus on the stock over the last several years, and I think we're just getting started. I think we got a long runway of growth ahead here in Elf, okay? Now, some signs of a great company is a company that can continually beat earnings expectations quarter in and quarter out on the revenue side and on the earnings per share side. And this is very substantial. And if we look at Elf, quarter after quarter after quarter after quarter, you're not going to find a more high quality company than an Elf Beauty. Not. There's no companies out there that are beating this substantially quarter in and quarter out for the last several years. It's incredible. Some companies can beat a little bit here, a little bit there. These beats are epic on the earnings per share side that Elf comes in at. It's shocking, borderline shocking. Now, the other beautiful thing about a company that continually beats analyst expectations quarter in and quarter out for revenue and for earnings per share is the company's basically always trading much cheaper than what you think you're paying for it. And that's beautiful because you might think you're paying, you could have thought you were paying a 50 forward PE last year for the stock, for instance, right? Really, you were paying a way lower forward PE than that because the company beat analyst expectations quarter in and quarter out over the past year. It's beautiful, okay? Now, if we look at a poor quality stock like a Dollar General, for instance, right, this is a sign of a poor quality company. They miss earnings per share, miss earnings per share, miss earnings per share, try to just come in and meet. And then if they beat earnings per share, it's like little teeny beats as a percentage basis, right? It missed on revenue, missed on revenue, missed on revenue, missed on revenue. And what does that do for a stock price? It kills it. That's why Dollar General stock is down 52% in the past year, right? It's lost all its gains from the past 5 years because their performance has been so bad, right? And so if you're wondering, what does Wall Street look at? What do investors like? They like companies that they know when that company reports earnings, they're likely coming in with beats. That makes investors feel comfortable, sleep well at night, and people will pay premium prices for companies that they feel comfortable with. No one wants to be in a company that is continually missing earnings. People want to be in these sorts of companies that are beating quarter in and quarter out. That's where you feel comfortable putting your money, right? It's your hard-earned money at the end of the day. Now, you might say, well, how does this company even make any damn money? Their products are so cheap. I mean, look at the price points. It's shocking. Look at this. $10, $5, $4, $6, $6, $3, $9.99. Heck, you get 6 products here for less than 20 bucks. Are you kidding me? $5, $10, $6, $7, right? And you might say, there's no way this company makes good margins. There's no way selling products at this cheap price. Get ready to have your flapjacks flipped. Look at the gross margins. One of the highest gross margins you will ever find for a physical product company. I mean, these are practically digital product companies type sales, type gross margins. I mean, this is ridiculous. Gross margin for their latest quarter was up 570 basis points, which is just a fancy way of saying 5.7%, to 71%. That's crazy. I mean, it's almost impossible to find companies that sell physical products that have gross margins of 70+%. That's almost unheard of. It is insane, okay? Now, you might say, well, do people like their product? Yes, people love their product. Brand satisfaction is always super high. This company, friends tell friends, this person tells that person, they talk about it on social media. The brand satisfaction is over the top, and that's why people just continue to buy the product again and again and again, which is super important in the makeup industry because it's basically a consumable, right? You use your makeup or you use your skincare products, and then you got to go buy it again and buy it again. And so you have a recurring revenue stream there for years or potentially decades. Like if somebody starts using e.l.f. as a teenager, let's say, for instance, right? And they have a great experience with that, they're still going to use it in their 20s, in their 30s, in their 40s, so on and so forth, right? As long as that product continues to meet the quality that they're expecting. Now, if we look at their latest quarter, for instance, 76% sales growth. It's insane. 570 basis points of gross margin increase. And by the way, 76% net sales growth. And this is why almost you listen to how many companies, if we look at like the past quarter or two, the most companies ever are talking about soft demand, slow demand. It's a tough environment out there to operate. And e.l.f.'s like 76% revenue growth. Eat our dust, okay? Incredible gross margin. Adjusted EBITDA was up 122%. And look at this right here in front of you. 19 consecutive quarters of net sales growth. And the most shocking thing about this is, folks, even as a shareholder of this company, I've thought many times like, oh, this must be the top for their growth. Like they can't grow faster than this. I thought that even right here, when they grew revenue 16%, I was like, that's probably the top. And then they grew revenue 24%. And I was like, that's probably the top. Then they grew revenue 50%. I was like, they'll probably never touch a number like that again. Then they grew revenue 49%. I was like, what? Then they grew revenue 78%. I was like, what? They can never grow at those sorts of rates again. And then they came through with a 76% growth rate and then another quarter 76% growth rate. And I'm like, what? This is what you call a company that is on a whole other level when they consistently beat your expectations quarter in, quarter out, and you're just left there just shaking your head like, how are they doing this? This is incredible, okay? Now, this is extremely important. Listen, e.l.f. is one of 800 cosmetics brands or so, okay? There's a sea of cosmetics brands everywhere, right? And yet this company just continues to eat market share. 19 quarters of share gains, right? They just continue to take market share. This is the outlier company, okay? It's no different than there's a lot of people that play soccer. They're not Messi. There's a lot of people that play football and quarterback, and they're not Tom Brady. And there's a lot of people that play basketball, and they're not Steph Curry, okay? There's what we call outliers in sports. There's what we call outlier companies, where there's a lot of people that try to do the same thing, but there's just certain ones that are just so much better than everybody else that everybody's like, damn, man, how the hell do they do it? I really don't understand. Like, how the hell do they do it? And that is e.l.f. e.l.f. is the Messi of makeup. They are the Brady of makeup. They are the Steph Curry of makeup, the Michael Jordan, whatever you want to call it. They're on a whole different level. Now, the beautiful thing is international sales is really just starting to come along for the company. 157% international sales growth. And keep in mind, the international market long-term should be far bigger, and I mean far bigger than the U.S. market, because their products are so affordable and they do so well on social media. Like, and obviously there's a lot more people that live outside the United States of America than live in the United States of America. So their international business should completely dwarf their U.S. business over time, okay? Look at this. In Canada, they're 10xing the category. In the United Kingdom, they're 7xing the category. These are extraordinary numbers, okay? This company's on a whole different level. Now, how do they do this? They do it through a lot of different ways. Some is with their brand packaging. Some is with their price points, their quality. Another way is on social media. This company understands social media going viral better than certainly any company in the makeup industry, maybe any company in the world, to be quite frank, okay? Look at this. They do these like collabs with different companies, okay? Like they did this one with Chipotle, got over 4 billion impressions. They did this one here, this collab with Dunkin' Donuts, over 5 billion impressions. They did this one with, American Eagle jeans or whatever, 7 billion plus impressions. They did this one with this Dirty Pillows company, 11 billion plus impressions. That sold out in less than 2 hours. They sold out in less than 2 hours, folks, okay? And around 40% of the people that bought were were new customers, like new purchasers for Elf. I mean, they understand going viral on a whole different level. They understand social media on a whole different level. Instagram, TikTok, YouTube, the whole game, okay? Now, with their products, they're coming in at price points that are so much lower than like the prestige categories, but people say that the quality is pretty much on par with the prestige quality. So they'll sell a product for $10 when the other name brands are selling it for $54. They'll sell a product at $7 versus other name brands are selling it for $31, or sell a product for $10 when the other name brands are selling it for $38, right? That's the beautiful thing when you come in with that great quality and it's at a price point that literally everybody can afford. Everybody can afford those price points, okay? Now, this is the other huge component of Elf's growth right now and over the coming years is shelf space. This is very important, okay? Very important. They're growing massively in Target. They're also growing massively in Walmart. They just, back in the springtime, they had new, let's call it increases in shelf space. They also just, in the fall time right now, they got Ulta Beauty space expansion, CVS and Walgreens as well. They got more coming in the spring. And I don't see there being any time soon when they stop growing shelf space, because when I look, I'm looking and I'm saying, like, they're the most dominant makeup company out there right now. Like, the numbers they're putting up, the growth they're putting up, like, if you're a retailer, you want to have more and more space. Like, they're over-indexing in a massive, massive way. Check this out. I posted this inside my private stock group, inside the Elf chat here, okay? And I needed to go to Walgreens for something, and I walked by the beauty section, and I just looked, and I'm like, whoa, look at that Elf section there. And it's amazing, because I remember when I was first investing in this company, like, my local Walgreens didn't even carry Elf. They didn't even carry Elf back in those days. And to now see that big of an Elf section for Walgreens is just absolutely phenomenal, right? And they're just going to continue to gobble up market share, right? Now, if we look at their income statement, this is as good as it gets, folks, in the public markets. This is an A+ income statement, okay? 215, this is their quarter they just reported in the last week or two. Net sales, $215 million versus $122 million in the same quarter last year. Cost of sales went up hardly anything compared to their net sales increase. Went to $63 million versus $42 million. That means their gross profit's going to explode, right? Their gross profit went to $152 million versus $79 million in the same quarter last year. Selling general administrative expenses were up substantially for the company, as you would expect, considering they're expanding so rapidly and including around the world, right? Despite selling general administrative expenses being up substantially for the company, operating income still went to over $40 million. That's versus $15 million operating income in the same quarter last year. Net income nearly 3x'd for the company to $33 million from $11 million in the same quarter last year, right? And their earnings per share nearly 3x'd as well. That's an A+ income statement. It doesn't get better than that. That is absolutely shockingly phenomenal. On top of that, their balance sheet is phenomenal as well. Cash and cash equivalents, $167 million. Total assets of $746 million versus total liabilities of $230 million. Yeah, baby. That's a balance sheet there, okay? That's a balance sheet. Now, let's talk about the one elephant in the room, okay? The one elephant in the room is valuation. Somebody could look at this stock, and if they're not, let's just call it very educated, they could say, you know what? This stock is trading expensive. It's overvalued. Is it? Here's the deal. We're trading at about 37 times forward P for this year's numbers expected, okay? 37 times. Now, that's about 2x what the market trades at. Market's usually in the kind of the 15 to 20 range, roughly. So let's call it 2x-ish the market, right? Now, one thing is, what do we know about Elf? They beat numbers like every freaking quarter. So there's very high probability that this 265 that analysts are expecting for EPS for this year there's a very high probability it's too low, considering Elf beats quarter in, quarter out, right? That's the first thing we got to consider. So maybe that's a lot lower number. The second component is, right? Elf is growing revenue at 70+% clip. They've done it 3 straight quarters, right? The average stock in the market is growing revenue, well under 7%, let's say, for instance. So Elf has 10x, at least 10x, the type of growth of the average stock in the stock market. But yet it has roughly 2x the valuation of the average stock in the stock market. That means huge, huge arbitrage. And I mean massive arbitrage in regards to Elf Beauty here, folks. So when I look at Elf Beauty, I look out there and I bring it back to the 4 scenarios that could play out next year, right? And it doesn't matter whether inflation's high, whether inflation's not high, whether we have a recession, whether we don't have a recession. It doesn't matter. Elf's going to put up phenomenal numbers regardless of the economic environment. Regardless, they're going to put up extraordinary numbers. The Fed can lower interest rates, raise interest rates, keep interest rates the same in 24. It's all irrelevant to them. And there's very few companies that you can say that, because I can tell you there's a lot of companies out there that are very negatively affected, including even a company I own like Tesla, right? Very negatively affected by the interest rate environment we have right now, right? But I can tell you for an Elf Beauty, it's all irrelevant. They're going to put up phenomenal numbers next year, the year after, regardless of what goes on in the economy, regardless of recessions, no recessions, great economy, bad economy, okay economy, consumer confidence high, consumer confidence low. It's all irrelevant. They're just competing at a different level. They're the Messi, they're the Brady, they're the Steph Curry, okay? And so I absolutely love Elf Beauty. I obviously own my shares. I want to continue to hold my shares. I even bought more shares recently. Which was a tough decision for me to make. I can tell you that. To buy more shares of Elf, a stock you're already up 1,200% or whatever, to buy more shares shows my conviction in the stock for 2024 and the years beyond. And they honestly deserve my money. Sometimes in the market, you got to ask, who deserves your money? Who deserves your money? Damn, I got to say, Elf deserves my freaking money, okay?